Okay, so we are going to start with a revisionary series of audit. You can use this revision series for your second time revision, or but first you need to thoroughly go through the chapters individually and in-depth knowledge. Then only this will be help you to gain more insight, and for the revision purpose it will be helpful. In this we are going to cover chapter number 1, 2, 3, 4, chapter number 6, chapter number 7, 8, and chapter number 11. So let's get started. Chapter number 1, nature, scope, and objective of audit. Definition of audit. What is audit? Auditing is an independent examination of the financial information of an entity, whether profit oriented or not, and irrespective of its size or legal form. When such an examination is conducted with a view to express an opinion thereon. Okay, person conducting an audit is expected to, this is going to be asked in a 4 marks question, and if you see your question bank, there is multiple question asked on this topic as well. So the keyword for this you can remember is bios tacos, or whatever keyword you want to make. But the person conducting audit is expected to check the entries in books of accounts, financial statement show true and fair view of the P&L and assets and liability, accounting standard have been followed, clear information conveyed, none of the entries have been omitted, and supported by a sufficient and appropriate audit evidence. All this need to be taken care by the person conducting an audit. Next is objective of the audit, basic fundamentals. Preparation and presentation of the financial statement. Preparation and presentation of the financial statement is the responsibility of management, including those charged with governance. Prevention and detection of fraud and error is the primary responsibility of the management, including TCWG. Auditor's primary duty is to perform and express an opinion on the financial statement being audited. Auditor need to maintain an attitude of professional skepticism, which means a questioning mind or maintaining alertness while planning and performing an audit. After a reasonable verification, auditor may consider the document and the records of the auditee as a genuine unless there are reason to believe the contrary. Auditor can be held liable for a fraud in the financial statement only if it is proved that he was grossly negligent in the conduct of his duties. Now, as per SA 200, overall objective of independent auditor and conduct of an audit in accordance with the SA, the overall objective of the auditor are, there are two overall objective of the auditor. First is to obtain a reasonable assurance whether the financial statement as a whole are free from material misstatement, and whether the financial statement are in accordance with the applicable financial reporting framework. And the other is to report on financial statement as required by SS in accordance with the auditor's finding. Reasonable assurance means auditor is providing a high level of trust assurance through his opinion, but his opinion is not a guarantee, not an absolute assurance. Auditor cannot provide a guarantee because audit suffers from some unavoidable inherent limitations. Okay, free from material misstatement means financial statement should be free from from a significant or a large errors. Applicable financial reporting framework means that set of guidelines based upon which the entity has to prepare their financial statement. What is a professional skepticism means? It means maintaining alertness and a questioning mind. Auditors shall consider the document as a genuine unless there are reasons or evidence to believe the otherwise. Auditor shall maintain such attitude throughout the audit. It means auditor has to maintain an attitude of a professional skepticism. Now the example is uh, memory technique is contradict far. Audit evidence that contradict the other evidence, information that create a doubt over a reliability of the document, condition that indicate possible fraud, and additional audit procedure to be performed in case of doubt. In all these cases, auditor need to maintain an attitude of professional skepticism. The next is the scope of audit, which is an important topic. Scope of audit means coverage of an audit. How many areas auditor need to cover in order to achieve his objective. Scope of audit of financial statement is governed by applicable laws, standard on auditing issued by the ICAI, and the terms of the engagement as agreed with the client. Scope includes the following: coverage of all aspects of entity relevant to financial statement being audited, sufficiency and reliability of the information, and disclosure, whether the proper disclosure have been made as per the accounting standard and applicable laws. Scope exclude, which is not included in scope. Auditor is not expected to perform the duties which fall outside the domain of his competence. Auditor is not an expert in authentication of document, and audit is not an official investigation into alleged wrongdoing. Investigation is a critical examination of the accounts with a special purpose. So audit is not an investigation. Okay. Types of audit of financial statement. First is a statutory audit and other is a voluntary audit. Statutory audit, audit of financial statement required by law, uh, in which Companies Act 2013 is applicable, Banking Regulation Act, Insurance Act, and any other governing act is applicable. So that requires an statutory audit, which is compulsory. And voluntary audit, audit of financial statement not required by law, audit of the financial statement by the proprietor or a partnership firm or an HUF. Okay. So, who appoint the auditor? Generally, an auditor is appointed by the owners. In case of government companies in India, auditor is appointed by CAG, Comptroller and Auditor General of India, an independent constitutional authority. In case of firm, auditor is appointed by partners of the firm, and in case of companies, auditor is appointed by members, it means a shareholder in AGM. The audit report is submitted to the person making the appointment. In case of companies, these are the shareholders, and in case of firm, the partner who have engaged him. Okay. Advantage of an audit. The keyword you can use is I am detective safe. So what are the advantages of the audit? Audit helps in improving internal control. It act as a moral check on the employees. Detective help in detection of the wastage or losses. Safeguard the financial interests of the stakeholder. It helps the government to assess the tax liability. It helps the shareholders to take investing decisions. It helps the management in decisions making, or it helps the audit helps the bank and financial institution to assess the credit worthiness of the company. And it helps the employee, I mean auditor, uh, audit helps the auditor can assess the performance of the employee. Sorry, I missed the point. The next is inherent limitation of an audit. The memory technique is facto. You can see that. Uh, what are the inherent limitation of an audit, and why auditor cannot reduce the audit risk to zero and cannot provide an absolute assurance? The reason is that audit has an Inherent limitation. So the first is nature of financial reporting. The first is nature of financial reporting. Preparation of the financial statement involves the estimate, which further involves the uncertainty as there could be multiple judgment. Okay, and financial statement are prepared by management, so that judgment can be uh, could be multiple judgment and uncertainty very much involved in that. Nature of audit procedure. Auditor may not obtain the required audit evidence due to practical and legal limitation. Example, management may not provide a complete data. Audit is not an investigation and hence there are no specific power of search and seizure. Cost benefit balance. There is a balance to be struck between the value of the information and the cost to be incurred for obtaining such information. Timeliness of the financial reporting. There is an expectation that the audit report should be made available within a specified time frame. Due to this, auditor adopts a sampling technique, and he cannot go into so much of depth to verify and to check each and every transaction of the company. That would not be possible within the specified time frame. The matter of the difficulty, time or cost involved is not itself a valid basis for the auditor to omit an audit procedure for which there is no alternative. And from all other matters, in some matters auditors ability to detect the misstatement greatly reduced, uh, for example fraud, related party transactions, etc. Relationship of the auditing with other discipline, with accounts, law, costing, economics, mathematics and statistics, behavioral science, data processing, financial management. So in that topic you have to connect every subject with the audit and explain why it is important to have a knowledge of that subject. 2 3 line per point you have to write in that. The next is the concept of engagement. Engagement means an arrangement to do something. Now assurance engagement means there is a CA in practice, which is called a practitioner. There is a client, responsible party. So responsible party provide a subject matter to a practitioner, and practitioner express a conclusion about the outcome of the evaluation of the subject matter against the criteria to a responsible party to enhance the degree of confidence of the intended user other than the responsible party. Who are the intended user? Shareholders or government. Elements of the assurance engagement. There are 5 elements of the assurance engagement. The first is a three-party relationship involving a practitioner, responsible party, and intended user. Second is an appropriate subject matter. Third is suitable criteria. Fourth is sufficient appropriate evidence. And fifth is a written assurance report in appropriate form. So these are the elements of the assurance engagement. The next is S's introduction, standard on auditing, introduction to engagement and quality control standards. Following engagement and a quality control standards have been issued by Auditing and Assurance Standard Board. First is SQC, Standard on Quality Control. Quality control measures to be implemented by the members. Standard on auditing, audit of the financial statement. Standard on review engagement, review of the financial statement. Standard on assurance engagement, SAE, other assurance engagement, examination of information other than financial statement. And the last is a standard on related services, performing procedure as agreed with the client. No assurance activity is involved in that. For example, compiling of a financial statement. Okay. Inter-CA syllabus deals only with essays. Standard on auditing issued by Auditing and Assurance Standard Board for bringing a uniformity in auditing practices while auditing financial statement of any entity irrespective of its size and nature. As per the preface to auditing pronouncement, it is mandatory to follow the essays while auditing the financial statement irrespective of the entity being audited. Okay. Assurance engagement. So there are three types of assurance engagement. First is a reasonable assurance engagement, second is limited assurance engagement, and third is a assurance engagement dealing with the matters other than historical financial information, which is an examination of the prospective financial information like forecast or assurance regarding the operations of control. Limited assurance engagement is a review, and reasonable assurance engagement is an audit. Now the difference between a reasonable assurance engagement and limited assurance engagement. Reasonable assurance engagement provide a high level of assurance. Limited assurance engagement provide a lower level of assurance than a reasonable assurance engagement. Second, it provide it performs elaborate and extensive procedure to obtain sufficient appropriate audit evidence. It performs fewer procedure as compared to a reasonable assurance engagement. Third is reasonable assurance engagement draws a reasonable conclusion on the basis of sufficient appropriate audit evidence. Limited assurance engagement involves obtaining sufficient appropriate evidence to draw a limited conclusions. It draws a reasonable conclusion and it draws a limited conclusions. Fourth is example of the reasonable assurance engagement is an audit engagement, and example of limited assurance engagement is a review engagement. Okay. This is just for the understanding. If you want, I can make it explain, or you can just skip it. Let me just explain it. Okay. Framework behind the engagement and quality control standard. So the first is an Indian scenario and the other is a global scenario. First, Indian scenario, in which ICAI has established the Auditing and Assurance Standard Board, and Auditing and Assurance Standard Board has issued engagement and quality control standard which are in practice. And in global scenario, International Federation of Accountants has established International Auditing and Assurance Standard Board, and they follow that standard. Authority attached to the documents issued by the ICAI. Statement issued by the Council of ICAI are mandatory. Statement on accounting matters, if not followed by the client, then auditor must mention it in his report. Statement on auditing matters must be followed by the auditor. Guidance note issued by the ICAI are recommendatory unless otherwise stated by the ICAI. It means exceptionally we can follow our own judgment only if we have a valid reason to do so. Otherwise, we have to follow the guidance note. The next is important phrases to know standard on auditing better. These are the standard on auditing. Okay, basic some terms are there which we are going to understand. First, we have to understand difference between the word management and TCWG. TCWG, those charged with governance, person providing a strategic direction to the entity and responsible for the oversight of the management when they are preparing and presenting financial statement. It means audit committee, board of directors, etc. And management are person responsible for executing the direction and preparation and presentation of the financial statement. Example, CEO, CFO, key managerial person, etc. are all known as management. In small entities, management and TCWG could be the same person. Second is applicable financial reporting framework. The financial reporting framework adopted by the management and where appropriate TCWG in preparation and presentation of the financial statement that is acceptable in view of the nature of the entity and objective of the financial statement, or that is required by the law or regulation. For example, Schedule 3 plus accounting standard in case of companies, all those are required by law and regulation to follow. Okay. Third is materiality in the context of audit. Material item are such item which can impact the economic decisions of the users of the financial statement. Materiality is a relative term. It depends upon the fact and the circumstances of each case. There is no single standard rule determining the materiality across the all circumstances. It depends upon various factors. Okay. Fourth is sufficient and appropriate audit evidence. Sufficiency means quantity of the information and appropriateness means quality of the information. Quality means a relevance, logical connection, and reliability means complete and accurate. Audit evidence is a cumulative in nature. Auditor needs to obtain at least persuasive audit evidence. In any auditing situation, if intended evidence is not available, then auditor shall not perform alternate audit procedure to obtain the sufficient appropriate audit evidence. Then auditor shall perform the alternate audit procedure. Okay. Evidence can be obtained from accounting records, books of account, ledger, invoices, bank statement, etc. And other information supporting the accounting records are minutes of meeting, confirmation from a third party, uh, memorandum of association, and article of association. Types of evidence. Based upon source of information and based upon nature of information. Evidence का नेचर होगा written, oral and visual. Source internal evidence and external evidence. Internal evidence originate from the entity being audited, and external evidence are originate from the source outside the entity. For example, इंटरनल एविडेंस यहाँ पे हो जाएगा सेल इनवॉइस एंड एक्सटर्नल एविडेंस यहाँ पे हो जाएगा परचेज इनवॉइस. ओके. एविडेंस बेस्ड अपॉन नेचर ऑफ इंफॉर्मेशन. रिटर्न मीन्स डॉक्यूमेंटेड फॉर्म में होगा। विजुअल, द एविडेंस विच गेट ऑब्टेन्ड बाय ऑब्जर्वेशन, इन्वेंटरी चेक में ऑब्जर्वेशन होगा वो। एंड ओरल, डिस्कशन विथ मैनेजमेंट और TCWG। ओके, नेक्स्ट इज फिफ्थ इज concept of assertion. Assertions are representations made by management in financial statement either directly or indirectly about the transaction balance and disclosures. First is, and the memory technique we have to use is OCACC, EVRC, OACC. You can use any memory technique. Okay, I just realized that this is a little bit of shuffling is there, it is not in a sequence. So the first no let's get started with the assertions about the transaction. Transactions means P&L item. Transactions about balances, balance sheet item. And assertions about presentation and disclosure. Occurrence, transaction or event recorded in financial statement have actually occurred. C से होगा completeness, no omission. A, accuracy, amount and other data is appropriate. Cut off, correct accounting period, the transaction is recorded in correct accounting period, so cut off assertion. Classification, recorded in proper accounts. Assertion about balance, existence, assets and liability exists, appropriate amount and adjustment is done, it is of valuation. Right and obligation holds the control, the assets and liability are actual obligation of the entity. And completeness, no omission, completely recorded. Right and obligation may, if there is a building or a property, then papers are in name of the company itself or not. All these rights and obligation we have to check that holds the control of the assets and liability and actual obligation of the entity. Assertion about the presentation and disclosure, occurrence and right and obligation, accuracy and valuation, classification and understandability and completeness. Sixth is audit procedure. In order to conduct the audit of the financial statement and obtain sufficient appropriate audit evidence, auditor need to perform the following procedure: understand the entity and its environment, obtain the knowledge of a client business to identify what can go wrong, risk of fraud and error in financial statement, evaluate entities accounting system and internal control relevant to preparation of the financial statement to assess the chance of error and fraud in financial statement. It helps the auditor in identifying and assessing the risk of material misstatement. Audit procedure helps the auditor in identifying and assessing the risk of material misstatement, whether due to fraud or error, at assertion level and at overall financial level. At a overall financial level, auditor procedure helps in identifying and assessing the risk of material misstatement, that what can go wrong in overall financial statement. And at assertion level, chances of error and fraud in individual transaction balance disclosures. Now, uh, audit procedure help Audit procedure helps the auditor in determining the nature, timing, and extent of further audit procedure, response to the assessed risk of material misstatement. Compliance procedure and substantive procedure. Compliance procedure is test of control. Verify operating effectiveness of the control and detect deviation, if any, from the prescribed procedure. वेरीफाई ऑपरेटिंग इफेक्टिवनेस ऑफ द कंट्रोल, इंटरनल कंट्रोल को चेक करना एंड डिटेक्ट डेविएशन, और अगर वो इंटरनल कंट्रोल्स के अंदर कोई डेविएशन है, इफ़ एनी, फ्रॉम द प्रिस्क्राइब प्रोसीजर, तो नेक्स्ट सब्सटेंटिव प्रोसीजर टेस्ट ऑफ डिटेल टू वेरीफाई द अकाउंट बैलेंस, classification, presentation, and disclosure, and identify the misstatement, if any, by vouching and verification. Analytical procedure, example, ratio, comparison, and trend analysis, etc. Auditor also applies analytical procedure, ratios, and comparisons while performing the risk assessment procedure, which will discuss this concept in chapter number 8. Okay. Next is audit opinion. Pervasive means, as per auditor's judgment, the effect is such that it covers a major portion of the financial statement and it is not limited to some specific item. For example, while auditing a coaching class, if you find admission of a student and a payment done to professor are wrongly recorded, or you were not given the data related to admission of the student and payment done to the professor. Material but not pervasive means, as per the auditor's judgment, the effect is significant, but it is limited to specific item of the financial statement and does not cover substantially overall financial statement. For example, while auditing a coaching class, you find printing and stationery expense are incorrectly recorded, or you were not given a sufficient data to verify the printing and stationery expenses. Now, if the auditor is giving a qualified opinion, then how he is going to draft that? So, here is a qualified opinion drafting. To the best of our knowledge and information available with us, in our opinion, financial statement of the entity shows a true and fair view of the state of the affairs as on the year end, and profit and loss account and cash flow for the year ended on 31st March year mentioned, except for the matters explained in the basis for qualified opinion paragraph, a separate paragraph for the explaining the reason. And the next is how to draft an adverse opinion. So the adverse opinion goes as: to the best of our knowledge and information available with us, in our opinion, financial statement of entity do not show true and fair view of the state of affairs as on the year end, and profit and loss account and cash flow for the year 31st March due to, alright, let's just say 31st March 2025, due to the matters explained in basis for adverse opinion paragraph, a separate paragraph for explaining the reason. Next is, if we are giving a disclaimer of an opinion. Let me just quickly recall you: if sufficient appropriate audit evidence is obtained and not available. Not available, effect is material and pervasive, then auditor will give a, sorry, material but not pervasive to qualified opinion, and material and pervasive disclaimer of opinion. If sufficient appropriate audit evidence is obtained and the effect is material but not pervasive, then again qualified opinion. Material and pervasive, then adverse opinion. So we have already seen how we are going to draft an qualified opinion, how we are going to draft an adverse opinion. Now we'll see how we are going to draft an disclaimer of an opinion. Disclaimer of opinion: we are unable to form and express an opinion whether the financial statement of entity show a true and fair view of the state of the affairs as on year end, profit or loss account and cash flow for the year ended on 31st March 2025, due to the limitation on the scope of audit as explained in basis for disclaimer of an opinion paragraph, a separate paragraph for the explaining the reasons. 9.8 key audit matter, which is in standard on audit 701. It is an additional paragraph inserted by ICAI in audit report from financial year 2018 and 19 onwards. Key audit matter is mandatory for audit of a listed entities. Auditor can voluntarily apply the concept of key audit matter in audit of the other unlisted entity which are of a public interest as per his judgment. What is a key audit matter? Key audit matter is selected from the matters communicated with TCWG. Key audit matter are those matters that in auditor's professional judgment were of important points of key audit matter. Factors to be considered for determining the key audit matter to be read after all essays are over. How to communicate key audit matter in audit report, and principles while communicating Key audit matter. Factors to be considered determining which matter could be a key audit matter. Areas of higher assessed risk of material misstatement or significant risk identify as per SA 315. Significant judgment by the auditor relating to the areas that involve a significant management judgment, such as accounting estimate with a high estimation uncertainty. For example, valuation of unlisted securities, pending litigations, etc. And the effect on the audit of a significant event transaction that occurred during the period. For example, significant economic, accounting, regulatory, industry, or other development that affected the management's assumption or judgment may also affect the auditor's overall approach to the audit and result in a matter requiring a significant auditor attention. How to communicate key audit matter in audit report. This is how we are going to communicate. The introductory language under key audit matters shall state the following. Key audit matters are those matters that in the auditor's professional judgment were of most significance in the audit of the financial statement of the current period, and these matters were addressed in the context of the audit of the financial statement as a whole and informing the auditor's opinion thereon, and the auditor does not provide a separate opinion on this matter. Describe each key audit matter under appropriate subheading. For each key audit matter, auditor shall give a reference to related disclosure, if any, in the financial statement, explain why the matter was considered to be one of the most significant matter, and explain how the matter was addressed resolved in the audit. For example, during the year end, if fire broke out in a factory, okay, so how inventory was managed, or whether there was an insurance covering the stock, and loss or damage which occurred. So all these are the key audit matters which need to be addressed. Note: if SA 701 key audit matter is applicable, then there are no key audit matter in current period. Then auditor should mention this fact in the audit report under the heading key audit matter. Even if there are no key audit matter in a current period, then auditor has to mention in key audit matter as 701 paragraph that there is no key audit matters in current period. You can't ignore or left that paragraph as such. You have to mention that, or you cannot omit it. Okay. Second is, if SA 701 is applicable and key audit matter have been already covered by the other paragraph, then auditor should mention such fact in the audit report under the heading key audit matter. You have to give a reference over that this topic or this key audit matter points are covered by the other paragraph. Important principles for communicating key audit matter in audit report. Key audit matter is not a substitute for disclosures required in the financial statement, expressing a modified opinion as per SA 705, and describing material uncertainty relating to going concern as per SA 570. Key audit matter are additional important fact which auditor intend to highlight and it is not to be taken as auditor's opinion on such matter. If auditor has expressed a disclaimer of opinion as per 705 मतलब modified opinion given, then in such audit report he shall not insert key audit matter. This is specific restrictions by the ICAI. Okay, if 705 is applicable, an auditor has determined a matter as a key audit matter, he may not communicate such matter in audit report if law or regulation precludes, prohibit public disclosure about the matter. For example, matters under a judicial investigations, or in extremely rare circumstances the auditor determined that the matter should not be communicated in auditor's report because the adverse consequences of doing so would be more than the public interest benefit of such communication. Right? And 10th is, then we are going to wind up this session. Emphasis of meta paragraph and other meta paragraph. This paragraph is used as an additional disclosure in the audit report in order to highlight a matter presented or disclosed in a financial statement and for which the auditor does not have a modified opinion as per 705, but as per auditor's judgment, matter is a fundamental to the user's understanding of financial statement. If all of the above conditions are satisfied, then auditor should highlight such matters under emphasis of matter paragraph in audit report. During the audit, for example, during the audit of a private limited company, auditor has observed that there were changes in some accounting policies which have been properly recorded in the financial statement, but auditor wants to highlight it separately in audit report. Okay, let's see the drafting of emphasis of matter paragraph in audit report. While drafting the emphasis of matter paragraph in audit report, auditor has to ensure that he states clearly that his opinion is not modified with respect to such matter, and he must provide reference to relevant notes to accounts which have been discussed in emphasis of matter paragraph. All right.